Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Remember yesterday we discussed about the importance of vaccine or a treatment for COVID-19, aka coronavirus. Now, the price action day before yesterday clearly showed that the Dow surged over 1,000 points, not 1,000% obviously, ostensibly, because there was enormous amount of optimism that this particular vaccine can perhaps eliminate the need for that social distance measure. Because remember, it is this particular social distancing measures which can and which are likely to subdue the business activity. Now, if we have a vaccine, then clearly we do not need to maintain this social distancing measure which the government has. Governments around the world they have put in place. Now, as of yesterday, what happened in the equity market was that traders started to digest this news with respect to vaccine. Again, something very normal, because speculators usually drive the markets higher the moment that they get some sort of a news with respect to vaccine without reading too much detail. But once investors start to digest and market starts to digest that important information, then the reality starts to appear. And what happened with respect to this vaccine was that there wasn't enough information, and the company Moderna kept most of the critical information on its own file rather than making that information public. Hence, traders were worried that okay, perhaps the likelihood of this vaccine moving from stage 1 to stage 2 are still minuscule. So during the final hours of trading yesterday, the S&P 500 index experienced immense amount of sell-off. As you can see in the chart, that the most of the sell-off happened during the final hour when the S&P 500 index lost over 1% of its value, and similar moves were also replicated for the Dow Jones index. Yes, Nasdaq index dropped only by 0.3%, so not much damage done there. But when we look at the equity price action today, things are very discarded. How? Because on one hand, what we have US futures which are trading to the upside by over 100 points, and I'm specifically talking about Dow Jones futures. But when we focus on the European markets, indices such as Stoxx 600, Stoxx 50, CAC 40, IBEX and FTSE MIB, they are all trading to the downside, and all of these indices are down between 0.3% to 0.5%. Now clearly, again, there's a disconnect. Now, whether we are going to see the US futures pulling the European markets out of its misery, and that is something to be seen. But when the US futures are only trading about 100 points, it is likely that the US futures will be actually dragged lower because of the European market's influence. But again, the major factor over here is that vaccine, which actually produced that enormous amount of a surge in the US equity markets that also had a spillover effect for other equity markets such as Asia and of course in Europe as well. Now, moving on from the equity market into commodity space, precious metal, as we discussed before, remains the most important place for investors. The reason for this particular this factor is because investors are considering any pullback as an opportunity to get back on this bandwagon, and that they wanted to continue this upward journey with the gold price action so that it can achieve its target of 2000. Now again, there's a huge question mark whether gold price can still reach its 2000 mark, because Jerome Powell, the Federal Reserve Chairman, yesterday, he pushed back with respect to the prospects of negative interest rates becoming a reality. And as long as the negative interest rates don't become reality, that prospect of gold price touching that 3000 mark, it remains nothing but just an illusion for the time being. Now, to finish off, in the oil market, it has entered in its what I call consolidation space because it has already hit its ceiling. Remember, again, we discussed something about this yesterday in our video when we talked about the future curve, the forward curve for crude oil. So I'm talking about contracts, crude oil contracts for the month of December or from there onwards. They are still very much trading below that critical level of 35, and the current month is already trading at 33. So this means that prices have moved too quickly and too fast, obviously, but now now is a period where we are likely to see more consolidation or perhaps a move to the downside. So that is what pretty much happening in the commodity and equity space. But remember, as always, you can protect your upward or downward position, your upside or downside position by using AvaProtect. That's all for today. See you guys tomorrow.